Hi everyone, I'm Paul Ticki, Portfolio Manager at Stiles Financial. Welcome to this week's Financial Flash for April 5th, 2025. You won't be surprised, but I'm going to talk about tariffs today. With the recent announcements from the Trump administration, many of you are understandably wondering how new tariffs might affect the economy and how it might impact your investments. So let's walk through what's happening, why it's happening, and what it all means for you. So, what's happening? Starting April 5th, the U.S. will impose universal 10% tariffs on all imported goods, unless a country is specifically exempted. Then, beginning April 9th, a second layer of reciprocal tariffs will take effect. These target about 60 countries identified as the biggest trade offenders, places like China, Vietnam, the EU, and others. These tariffs are steep, some as high as 54%, and are based on perceived trade imbalances, currency practices, and subsidies. This is the most aggressive U.S. tariff policy in nearly a century. So, why is this happening? The administration is calling this a major push to reduce the trade deficit, revive domestic manufacturing, and, frankly, reshape global trade relationships. President Trump has labeled it Liberation Day, indicating he views this as a long-term strategy, not just a bargaining chip. But will it last? That's unclear. This could be a years-long policy or the start of negotiations that change course quickly. Either way, it's the uncertainty that has the biggest impact on the markets right now. Should investors be worried? We're not sounding any alarms. Yes, there's concern from trading partners, and yes, there's a potential for trade war, but we're not there yet. As of now, countries are signaling pushback, but no major retaliatory moves have been made. We do expect growth to slow somewhat and inflation to tick up, but we're not calling for a recession. In fact, when you look back to 2018, when Trump imposed 25% tariffs on steel, growth slowed, but it didn't stop. What we're seeing now is broader, yes, but that doesn't guarantee negative growth. It just makes markets more sensitive in the near term. What about your investments? Markets hate uncertainty, and today's volatility is a reflection of that. We've seen stocks dip, especially in companies that rely heavily on imports like Apple, Ford, and Nike. Treasury yields are falling also as money moves into safer assets. Oil prices are also down on concerns about slower demand. But let's take a breath here. This kind of reaction is typical when markets are trying to price in big news with little clarity. And it's why we don't build portfolios around headlines. We build them for resilience. Diversification is doing its job right now, providing some stability in areas while markets digest the news. What about daily life? Will prices go up? Possibly yes, but not overnight. The 10% tariff kicks in this week, and it takes time for those costs to ripple through supply chains. You might eventually see prices rise on items like phones and cars and appliances. Some economists estimate it could add up to $1,000 a year in household expenses, but companies may absorb some of that, at least in the short term. If you're planning a big purchase, especially in something imported, it might make some sense to act sooner rather than later, but we're not suggesting panic buying or making big financial changes at this point. So what should you do? Without sounding repetitive to comments we have made in many other recent financial flashes, stay calm, stay invested, and stay diversified. We know this kind of news cycle can be unsettling, but remember, this is a developing story. The full effects of these tariffs will unfold over months, not days. We recommend staying focused on your long-term goals and keeping an eye on opportunities that may arise amid the volatility. This is exactly the kind of moment we plan for and why our portfolios are built with flexibility and risk management in mind. While the 24-hour news cycle can create anxiety, we remain steadfast that focusing on long-term investing is in the best interest of our clients. Thanks for tuning in to this week's Financial Flash, and as always, we're here to help you navigate with confidence. And if it raises any questions, please reach out to us. We're happy to talk. Have a great weekend.
The Financial Flash is created by the experts at Stiles Financial Services, creating customized portfolios that fit your unique lifestyle and goals.